Welcome to Highway Herald, your compass to the latest in auto. Today we're navigating the electric vehicle landscape, a hot topic stirring the auto industry. Contrary to the buzz, EVs aren't zooming off the lots. They're gathering dust at dealerships, putting dealers in a bind. Selling EVs is a struggle, and profits are meager when they do sell. Automakers are pressuring dealers to invest heavily in EV infrastructure and training. It's a tough period. Hence, we're presenting 7 reasons why Ford and GM dealers are under stress and seeking assistance. Reason number 7, GM's strategic move with Costco. In a recent strategic move, General Motors, GM, is boosting its electric vehicle sales by partnering with the Costco Auto program. This initiative leverages Costco's 50 million US members and aims to increase EV sales, building on the program's track record of facilitating over 500,000 vehicle sales annually. GM is offering a $1,000 incentive to Costco members on models like the Equinox, Blazer, and Cadillac Lyriq EVs, over existing incentives. This is part of GM's strategy to enhance EV adoption through competitive pricing and leveraging Costco's reputation. This partnership could increase sales volume due to Costco's extensive customer base, potentially benefiting dealerships with increased profits. However, the $1,000 incentive might decrease dealership profit margins, and customers might opt to buy directly from Costco, reducing dealership traffic. In conclusion, while this partnership could boost GM's EV sales, it's crucial that it doesn't negatively impact dealerships, a key part of GM's sales network. As the automotive industry evolves, it will be interesting to see how this strategy unfolds. Reason number 6, the end of dealer markups. Dealers' resistance to EVs is often justified, especially when considering profit margins. A few years back, supply chain disruptions caused by COVID-19 and the Ukraine war led to a scarcity of vehicles, driving up demand and prices. Dealers, selling models like Ford's Mustang Mach-E or Maverick above MSRP, were making record profits despite low overall sales. However, with supply chain issues resolved, the era of massive markups has ended. Dealers can no longer profit from high-demand models, especially as there are currently no hot EV models. With supply significantly exceeding demand and lots overcrowded, there's little enthusiasm for EVs, eliminating the possibility of markups. Companies are even forced to offer substantial discounts to sell their current inventory, dampening dealers' excitement towards electric cars. Reason number 5, the slowdown of EV growth and the rise of supply. Dealers are grappling with the challenges of EVs, largely due to a significant imbalance car makers have created between demand and supply. The growth of EVs has decelerated. Over recent years, growth often exceeded 90% year over year in the US, but the trend shifted in the last 12 months. In 2023, we saw a considerable dip in EV enthusiasm, culminating in a 47% growth. A decent figure, but notably lower than car makers' projections. Consequently, EVs have yet to surpass the 8% threshold of the total car market, a milestone anticipated long ago. With 2024's growth estimated at just over 30%, it's clear the slowdown persists. Simultaneously, Ford and GM have poured billions into new EV technologies and assemblies, significantly ramping up their production. These projects are still in progress, but the companies have already substantially increased their production. So much so that when considering this production increase and the current growth rate, supply is a staggering 500% higher compared to just a year ago. This contributes to dealers' conviction that the EV disaster is already underway. Reason number 4, the salesman's struggle. From a salesperson's viewpoint, selling EVs has become a complex and challenging task. Unlike selling traditional internal combustion cars, which often involves a straightforward process of a test ride and purchase completion within an hour, selling EVs is a different ballgame. EVs, being a new technology, require potential buyers to invest time to understand the tech, try it out, and seek answers to numerous questions. This typically means multiple dealership visits before a final decision is made. As we've mentioned in one of our previous videos, Buzz Smith, a former salesman turned EV dealer trainer, succinctly explained this issue. He pointed out that while gas-powered car purchases are usually completed in a single visit, EV purchases require an average of 4 visits. This means salespeople have to invest 4 times more effort to earn the same commission, effectively taking a voluntary 75% pay cut. This situation is undeniably challenging. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore reason number 3, the challenge of selling EVs. The imbalance between supply and demand in the EV market is glaringly apparent. When supply chains stabilized, production ramped up, and dealers riding the trend wave filled their lots with EVs. However, sales fell short of expectations as demand cooled, leaving dealers with a surplus of EVs. Consider the Baxter Auto Group from Nebraska and their experience with the all-electric F-150 Lightning last year. The launch of the F-150 Lightning created a frenzy, with this dealer alone receiving over 200 refundable orders. However, as Ford struggled to meet demand and potential buyers became aware of the pickup's shortcomings, the list dwindled. This group of 20 dealerships managed to sell just 25 all-electric F-150s last year, compared to over 1,000 internal combustion F-Series models. Currently, the dealer has 12 electric F-150 pickups in stock and is struggling to sell them. At the current sales pace, it will take at least 6 months to sell these 12 units, despite hefty discounts of up to $14,000, plus a $7,500 federal tax credit. Reason number 2, GM's EV woes. GM dealers are grappling with more than just inventory issues when it comes to selling EVs. The challenges run deeper, particularly with new generation models powered by Ultium battery technology. These EVs are accumulating at dealerships, not merely due to slow sales, but also because dealers are struggling to rectify numerous issues. Consequently, these EVs are languishing on lots for weeks, awaiting manufacturer feedback on specific problems. GM's latest models have proven to be highly unreliable, primarily due to significant software issues. The company has had to revise and update its software multiple times. The situation has escalated to the point where infotainment systems no longer support third-party services like Android Auto and Apple CarPlay. Each new update is a nightmare for the staff, as solutions to specific issues often seem elusive, even to the manufacturer. This is just the tip of the iceberg. Models like the Chevy Blazer EV and Cadillac Lyriq have shown such vulnerability that GM had to halt sales just a few months after launch. Meanwhile, dealers are expending time and resources trying to fix these persistent problems. Reason number 1, the high cost of selling EVs for Ford and GM dealers. EVs, representing a century's most radical shift, require dealers to make substantial investments to start selling them. Ford initiated its EV eligibility program, necessitating dealers to invest heavily in EV chargers, infrastructure, and staff training. In Ford's case, this investment ranges between $500,000 and $1.2 million. Initially, Ford had agreements with nearly 2/3 of all U.S. Ford dealers to start the program. However, with growth falling short of expectations, many dealers are reconsidering these hefty investments into an uncertain future. Reports suggest that the number of dealers willing to sell EVs has halved, likely even lower now that Ford has postponed some EV investments and the Biden administration has abandoned its fast electrification plan. GM's situation is even more challenging, struggling to sell EVs with the new Ultium technology. GM even tried to compel dealers to sell EVs, but this backfired. Buick, for instance, gave dealers an ultimatum to invest $400,000 and start selling EVs or opt for a buyout program, leading to Buick losing half of its dealers within a year. Thank you for joining us on this journey through the world of EVs. Don't forget to subscribe to Highway Herald to stay updated on the latest vehicle updates and upcoming videos. See you next time.